Hello, this is a tutorial video on from the basics of how to trade on the Forex market, and how to read a chart based on the system I have created, and the rules of the system. So hopefully this video will be able to teach someone who's never seen the charts before to have an idea of when to enter a trade and when to exit a trade. Or at least get us down a long way down the track, hopefully. So let's start by looking at just what the Forex market kind of looks like, how we view it. So this is some software called Market Scope 2.0. On this, we'll just go from the top down here. So we've got a bunch of buttons. These tabs here are showing us what market we're looking at and what time frame we're looking at. And then the movement of the price is captured in these things we call candlesticks. So basically a blue bar means the market's going up and a red bar means the market's going down. And I'll explain that in more detail. Then we've got some drawing tools. So we could draw circles if we wanted to show what the market's doing, or make little labels if we wanted just to keep track of what was happening. So that's what these things do. And then we've got the time, which is down the bottom here. So that's when each candle is occurring, and then the price. So down the right hand side is where the is a price gauge. So like this candle here is the most recent candle, and it shows us what price it's currently trading at. So that's how we view the market. Then a more in-depth look of what these candlesticks are, or the price movement here we call candlesticks. So this is how a candlestick's made, how it forms. So for a blue candle, the price, I mentioned the price is going up, and a red candle, the price is going down. What that means is as soon as the candle starts forming, which means let's say we're looking at a 1-day candle, then the first price traded for that day will constitute the first price of the candle. So if the candle, and we call that the open. So the candle opened at this price here, then at some point during that candle, the price came down to this low point, and then up to this high point, and then the very last price traded on this candle was at that price. So if it was a day candle we're looking at, that was the first trade of the day. That was the low of the day, the lowest the price traded. That's the highest the price traded, and that was the close was the very last price traded of the day. And a red candle everything is exactly the same, except it opened, the first trade of the day was at this price, and the last trade of the day was at this price. So all it means is it closed lower than it opened, and a blue candle just means it closed higher than it opened. So yeah, that's what the candlesticks look like and what that information means. So if we just jump back to the actual chart again, now if we just have a look at a candlestick, we can see that like this blue candle, it opened trading at about, actually if we click on it, we get this sort of thing. It opened at what goes away very quick too, 1.40865. It closed at 1.42354. You'll see the open and close in the brackets. And then it's also got the high and the low. But you can see because it's a blue candle, it closed higher than it opened. It opened at 1.40 and closed at 1.42, so higher. So that's why it's blue, and the red candle opened at 1.42 and closed at 1.40012. But yeah, just the first 3 digits there. Yeah, so, and then it's got the high and the close as well. Sorry, the high and the low. So that is, yeah, that's what we're looking at. And we'll just go back to my drawings. So that's what a candlestick is. Now, for the trading plan that I have created, I don't actually care if the candle is going up or down. All I'm looking at is the high and the low of the candle relative to the previous high and low. So what that means is, if we look at this first candle, let me just draw a circle. There we go. So that was the high of this candle. That was the low of this candle. Now, if we look at the next candle, does it have a higher high? And in this case, it does. So that is higher than the previous candle, and the low is higher than the previous low. So if we were just to connect those dots up, connect those lines up, so that's the high and it's going up, and that's the low and it's going up. So this candle here, that is an up candle. We might just put a green circle around up candles. We can't tell what this first candle is because we can't compare it to anything further left. So we'll just say that was our first candle. And then we had an up candle. Then the next candle, the highs are lower and the low is lower. So you can actually see that there is no wick on this candle. The low was either the open or the close. So we call this big black section of the candle the body, and the thin parts the wicks. And this candle here had no wick at the bottom, which means it either opened or closed exactly at the same price that the lowest price was. So if we just pretend that almost like there is no body of the candle, we don't really care. It's just the very highest point and the very lowest point. That's all we care about. So the lowest point of this candle was lower than the previous one, and the high was lower. So this candle was my little tools. So that candle is a down candle. So we'll just say red is a down candle and green is an up candle. Now, this next candle is a little bit different because it's got a higher high and a lower low. So what does that mean? That is a sideways candle. It's not higher overall and it's not lower overall. It's got a lower low and a higher high. So we just call it a sideways candle. And for a sideways candle, we'll just make that blue, which will take me 2 seconds. There we go. So, sideways candle, blue. Now, the next candle has a higher high and a higher low. So, that is an up candle. Oh, sorry, I made that red. There we go. Green for up candle. Now, the next candle, it's got a higher high. We just draw a little line from there to there. Higher high and a higher low. So therefore it is an up candle. And the next one, it's got a lower high and a lower low, so it's a down candle. The next candle has a higher high and a lower low, so it's a sideways candle. And the next candle, and this is one we haven't seen before, it's got a lower high plus a higher low. So it's still not both in one direction, so it's still a sideways candle. Let me just shrink that. So that is also a sideways candle. Both the highs and the lows have to be either both higher or both lower for it to be a candle that we consider up or down. If it's both higher and lower, or both lower and higher, then it's sideways. So in this chart here, we've got up, down, sideways, up, up, down, sideways, sideways. Now, the relevant information that we have when we are looking for implementing this information into a trading system is just, is the price moving up for multiple candles, or is it turning around and going down for multiple candles now? So up moves and down moves as opposed to just single candles. So from this candle, the first one, to the second candle, that was going up. So what we can do, we'll just pretend that this was the very start of our, because we don't have any information to the left, we'll say that was the lowest point. And it went up to here, which was the high of the up candle. Then the price came down. So it went from the highest point down to the lowest point of the down candle. Then the next candle went even lower. So we would connect the line to the lowest point. So let me just explain that again, because I don't think I did a great job. So what we're trying to do is find the lowest point of a move and going to the highest point of that same move. And the move can consist of as many candles as it requires until we get a candle in the opposite direction. So if we had 10 up candles all in a row, we would draw a line from the lowest point to the highest point of those up candles. And as soon as we get a down candle, we know that's the end of our move. And the exact same is true in reverse. So if we had 10 down candles, then an up candle, we would draw a line from the highest point to the lowest point of the string of down candles. And as soon as we get an up candle, we then start looking at the move of the up. So with that in mind, we'll draw this chart again. So this first one is a little up move because we've got an up candle. So from the lowest point to the highest point of that up move. Then we have a down candle. So that signified the end of the up move. And we're now looking at a down move. So we have a down candle. So the line goes to there. Then the next candle is sideways. And a sideways candle you incorporate into the same move. So in this case, the move is down. So we extend the lowest point down to the next sideways candle. Then the next candle is an up candle. So we know that that was the end of the down move. Now we're going up. So we go to from the lowest point of this next move to the highest point, which for this candle is this point. But then we have another up candle. So that we take this from the highest point and move it to the very highest point, which is there. And then we have a down candle, which shows that that was the end of the up move. So this down candle shows the start of the down move. And so just for these two candles, that's the lowest point. We're still in a down move, although this next candle is sideways because it's higher and lower. But that's still part of the same move. So the lowest point of this move is currently there. Then the next candle is still sideways, but the current candle, this big candle, has a lower low than this one. So we don't need to move the low point, which is here. We don't move it up. We still stay at the very lowest point. So that then went sideways. Let's just finish this move by doing something like that. Okay. So now this next, actually we'll do that. This next candle has a lower high and a lower low, so it's a down candle. So now the move comes down to there. and then we have an up candle. Let's just pretend it was there. So that's the end of that down move, and it starts going to there. So that's all the information we have at this stage. Now, if we here we go. If we get rid of all the black candles and just look at what we're left with, let me just do that and that. Now we're just left with a zigzag line. And if we're just looking at this line, we say that this was a high, and this was a low, then this was a high, then this was a low, and we haven't got a turn here, so we can't say that this was a high, because if it's possible that the candles keep going up here. So it's only on the turns that we say we've got a high or a low. So high, low, high, low. Every turn, if it's a turn turning up, it's a low. If it's a turn turning down, it's a high. Then, in the same way that we compare the candle to the previous candle, we also compare the high to the previous high and the low to the previous low to work out if we've got something called a higher high or a higher low. So this high here is lower than this high here. So if we just draw a line from 1 to 1, it goes up. Therefore, this high is higher than this one. Pretty simple. And for the lows, they look pretty close actually. It's ever so slightly higher. Yeah, this is ever so slightly higher. So this is a higher low than this one. Now, what information we use for this is the break of the previous high. So let's just pretend that this much didn't exist. We'll just black that part out. Now, if the price has come up and made this high, then it came down and made this low. Then we can see that the price was moving up, but hasn't broken that high yet. Hasn't broken that line. And as soon as it does, that is important information for us. The break of the previous high and the break of the previous low. So we're currently looking at the high and the price is moving up. And as we can see more market, we see that the price breaks it. So even if the price turned down here, we know that it's already gone higher. Therefore, it has already made a higher high because it can't undo this information. It's already been traded at this price. So as soon as it breaks it, we know that we will definitely have a higher high. Now, as soon as we get a break, what we do is we lock in the information of the most previous low. So as soon as we get a break of the high, this green circle, the previous low, is very important information for us. So keep that in mind. And then as soon as the price turns around and gives us a high, that is very important information for us too. So as soon as we have a break of a previous high, which was that one there, then as soon as it breaks the most recent low and wherever it next turns, wherever it makes the new high, those two bits are really important information for us. Now, the market can just, well, in this case, the market just kept coming down, and made a very slightly higher high. I think it was actually a little bit lower than that. It's around there. So yeah, slightly higher high, and then the price moved up a little bit. So this part here is extremely important. When we have a break of a previous high, then we keep track of the most recent low, and then as soon as we get a down candle and it shows us the high, then that becomes our next most important information. And the reason for that is if the price moves up and then down, then up, what happened here was we had a high, then a low, then we had a break of the high, which gave us this important bit of information, which is the most recent low. And then the price might come down, and now we have a high. So that is the most recent high. That is the most recent low before this high. And what we do is when this price breaks the high, then we move the low to the most recent low. But if the price doesn't break, if it just comes down and up and down, making new highs and new lows, but not breaking this price, then we don't care about what the market's doing. So the price has come up, down, and then broken the high, which was that one there. It made a new high, and as soon as it broke this high, we keep track of the low, of the most recent low. So that price there is very important to us. And as price from the high, when it came down, that becomes very important information for us. And what it is, this important information is to do with where we enter trades and where we exit trades. So this zigzag between the green line and the red line, which were from the high after the break of the most recent high, and the most recent low after the break of the high. So that is the green line is the high and the red line is the low. Then the price can just zigzag between it and we don't care. It's when the price breaks to a new high, then we've got the most recent low being that one. The most recent high would soon be that one, would be there. Let me just do that. And that was the high that was broken. So what we do in this trading plan is, with this information, what we do is when we get a market that's going zigzagging down, then zigzagging up. This not as clean as this, but the markets tend to move in a very zigzaggy fashion. If we just jump back to the market, we'll see here, for example, we can see that the price went, oh, let me just delete that. The price went down, up, down, then up. So that was the lowest point, up, down, sideways, up. So that's there to there, there to there, then it's down. So that's there to the lowest point, up to there. It's down to there, up, down, up. That's an interesting one. These are all sideways candles, all through here. And then up, sideways, down, so that's high there. And then no, up, so that's down to there. Okay, so this is what I've done here is the exact same rules that I've just shown you of how to work out if it's a high or low, and I've just connected the highest and the lowest points of each move. So if you just look at the green, you can see it zigzags all over the place. It zigzags up, and it also zigzags down, like you'd see over this part. If we joined all those up, it's just zigzagging down, and then it zigzags up. So this pitch that I've drawn it's very clean, but it's also semi-accurate. You do see the market doing exactly this. So zigzagging down, and then zigzags around, and then zigzags up. So the way we trade the system is, if we just monitor what's happening here, we've got a most recent low being broken, and therefore the most recent high is important information to us. And we'll make the lows in red. Now, the price came up and then broke the low again. So now this is our most recent high and our most recent low that has broken the previous low. Then the price came up and broke this low again. So now we've got a new most recent low, breaking a new low, breaking the most recent low. And then the price came up and then happened again. Then, actually I might make that see-through. Then, here, this red circle here was the lowest point of interest, and the green was the highest point of interest. And then the price came up and zigzagged around. It was making new highs and new lows, but it wasn't breaking the previous lowest point or the most recent high from that low. It just came up and down and zigzagged around until it hit this point here. That is the signifying point of we are now looking to be in an uptrend. So this whole move down, we were in a downtrend, and which just means the price is making lower lows and lower highs. Then the price came sideways, not making higher highs and higher lows or lower lows and lower highs. It's just going sideways within the 2 points of interest for us. Then the price came up and touched our most recent high above the lowest low. So as soon as it hit that, we then turn our thinking into a buy trade, not a sell trade. So that is our highest high, and this is our most recent high, and that is the most recent low. So as soon as we hit this point, the price comes down and then breaks this line here. On the break of that line, we would actually enter a trade. Then the price comes up and makes a new high, breaking the point where we had the reversal, comes up, makes a new high, then the price comes down, makes a new low, and on the break of this high, we have a new higher high, and this is our most recent low. Then it happens again, and again, and again. So what we do at this point here, we care about this green circle and the red circle. So the most recent low and the high that has broken the most recent high. So now if the price comes down, up, down, up, down, up, we don't care at all what happens in this area until we have either a break of the high or a break of the low. If we have a break of the low, we're now into sell territory. Or if we have a break of the high, we continue this trade up. So that's all we're looking for the whole time, is breaks of previous highs and previous lows. And once we've got a break to a new high or a new low, then we just ignore the zigzaggy mess in the middle. So that's basically the whole system in its most simple way. We don't actually enter the second the price touches here. We give it a little bit of a buffer room, but I'll explain that in more detail later. But that's the general idea. So if we look at the market, what does that mean here? So to find out where the uptrend started, we need to find out where the downtrend ended. So at a quick glance, we can see that this was a low point, just any old low point to keep track of. Then the price broke that low. That's the easiest way, just to quickly work out if you're still in a sell trend or still in a downtrend or an uptrend. Is just find a low and then find the break of that low. So that's what happened here. So if we come down and we see this low here, and then the price breaking that, now we can see that the price started to wiggle around. So we need to work out on this break here, what was the most recent high? And it was that point there. So with that information, we have the break, which came down and then up. So this point here is the lowest point that the downtrend got to. Then it came up. Remember, we don't care what happens between this price here, which was the most recent high after the break, and the lowest point, which was here. So if it goes lower, then we look for a new most recent high. Or if it goes higher, we start looking for uptrends. So at this point here, we had the break. So that broke to a new high, which means we now flip our thinking into a buy trend, which means we're looking for higher highs and lower lows. So this break made a high of there. And as soon as it made that high, we look for the most recent low, which is there. Once we have that, we either get a break of the low or a break of the high. That has to happen. The market either goes up or down. In this case, it broke high. So as soon as it did that, we knew that this was the most recent low after the break. And as soon as it turned, we know that this is the most recent high. Now, our point of interest is here and here. Then the price came down, didn't break our low, came up, down, and up. And here, it did break the high. So our most recent low is there, which means if we get a break of the low or a break of the high, if we get a break of the high, we just carry on with what we're doing. If we get a break of the low, we reverse. And we got a break of the low, which means we entered the trade here and exited here. So that was our little, let me just change the color, got a lot of green on the chart now. Let me make that blue. So that was the entry on the break of the high and then exiting on the break of that low in this case. Then the price comes down and we start looking in reverse again. So the price comes down and we don't have a high yet. So that's just where we're up to. But that is how we do the trading. It's just as soon as we get a break of one of these lines, which was determined by the lowest point in the most recent high, or the highest point in the most recent low, depending on if you're looking at a uptrend or a downtrend. Yeah, I think that's basically the entire strategy. So there is a little bit more to it, but there's no more analysis information we need. It's just, that's it. That's all we're ever looking for. Then what we do is we would enter a trade 10 pips above the point it tells us to enter, and we would exit the trade exit the trade 10 pips lower than it tells us to. That's basically the last of the information. Is we give it a little bit more breathing room than just coming down and touching the line. But apart from that, that's basically the system. So breaking to new highs or breaking to new lows, and that's it. Hopefully that made sense. I do daily recaps every day, so we can actually see this trading system in action. We do that every day, so see how we go. If you have any questions, feel free to email me. I'll put my email address in the comments section below. Yeah, hope you have a good day and happy trading.